How are you? Happy Wednesday. Please give me the okay if you can hear me. And now you should be able to see the screen as well. Perfecto. Thank you very much. Let's open the Epic Pen. Okay. Okay. All right. Oh, hold on. Why did I? I stopped that. Now the screen. Yep. Now the screen is back. Like a test. Perfect. Hello, Said. Welcome on board. So let's begin, guys. Once again, happy Wednesday. The FOMC, the Powell testification for the in front of the Congress. The first stage of it, tomorrow is the continuation, happened. The bottom line, the Fed is considering going for a cut of its rates by very likely next month, and if not, next meeting, and if not, on the next coming meetings. This is the main bottom line of the whole event, and that's what the market was expecting to hear. Besides that, we had several important news from Britain. Well, the main thing is the good, as expected, GDP, and a bit lower than expected, but still very much better than the previous report, manufacturing production. All that is from earlier today, and recently the Canadian Central Bank holds the rates as it is on 175. Later today, the FOMC meeting minutes. Hard to believe that there will be some major surprise in other direction than what the Fed designed in the live event before. So how does that affect the market and the setup? So generally speaking, so far the moves this week are less technical in terms of classical setups like trend lines, breakouts followed with divergences, fall breakouts and higher highs, and so on. A lot of levels reactions this week. This is more aggressive trading without classical setups, with expected levels though. And it's important to understand that, because when you approach a trade and you make a decision, you do want to value and estimate the risks as they are. And when the setup is not obvious and clear, we have always two choices. One, to play it aggressive with lower risk. Two, simply skip it and wait for better opportunities to come. So let's take a look over the report, the trades that we have been talking about and trading, and see what works, what failed, what's still running, and what's about to be created. The first one that we want to cover is the dollar yen. Our expectation of this triple cycle and the trendline breakout was to get a corrective cycle. Corrective cycle, as you know, happens in two waves or sort of a range. And this is what we are facing on the dollar yen since then. Two waves correction with some signs of a bearish divergence against us, and the 4-hour chart confirming the daily divergence by itself. So what's next with this pair? Honestly, it's not so obvious, so not so clear. I do believe we might be exposed to one more push further, but it's really not clear right now with divergences against. And as you already know my approach, when the market gives us signs against, it's time to become what? Neutral. So the break of the trend line that we have been working with game over, time to step back. Dollar yen moves to neutral. The next one to update was the euro versus the pound. Previous week created the convergence, we got the retrace, was holding the resistance beautifully, and then invalidated the level. Trade failed. What's next with this pair? The levels are still critical. We are still around the psychological zone of 090 up to 091 as per the cycle. Right? Very, very critical zone, and we are waiting for the next setup. We do have several false breakouts. We do have a flow of divergences. This is the most recent trend line followed by the divergence. Currently, it might change, but this is what we have at that moment. Break below that, and we can start talk about sell the rallies. So this is the trend line we're waiting for. Once broken, we can talk about the sells. As long as it's holding above, we do not get clear false breakouts yet, and a clear reversal signs. No reason to rush. Clear waiting. Okay, this is about the euro pound. Pound franc unchanged so far, holding as we discussed on Monday because of the very, 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 very weak momentum. Despite the great technical setup of convergence after two false breakouts, followed by the daily divergence, the market refuses to gain momentum. This is a time to drop the risk, right? Remember that? And that means reduce the exposure. Very important thing, and I want you always to have that in mind. You never want to force a setup. If your setup you were anticipating and expecting happens and there is no momentum, the market is trying to tell you a story, and this story is that the buyers are not there yet with the full power. And because of that, you don't want to put your full exposure. If it doesn't work in your direction, in a profit or in a loss, do not force a trade. And I want you always to have that in mind. Trading is not only about making more of the good profit. It's a lot of saving that trades that could turn to be losses. And these trades are normally providing some signs against, like lack of momentum and opposite direction signs. Always remember that none of us is smarter than the market. And it's a recipe for failure to think we are. It doesn't matter how good we draw or how strong is our expectations or. It does not matter. Listen to facts that the market provides. So this is for the pound franc, also very important. So far running, but with reduced exposure, and same pretty much happens with the euro versus the franc on the structure. Triple higher highs, higher lows, two waves correction, breakout, and we are holding in neutral. Warning sign as well. Does not gain the momentum, does not break the previous high, yet moving in sort of consolidation structure. Reduced risk or neutral, as simple as that. And I myself, because we could not gain any momentum, all we got was two waves, and since then a hold. And that's for a good while now. You see how long it is since the breakout, right? So it doesn't gain. Who am I to fight? Market knows best. I'm going neutral here, waiting for clearer signs. And one of the other reasons is because the daily starts to show potential signs against. And you know what I always say, if the synchronization is gone, I'm gone. I'm not in the trade anymore. So that's pretty much what happens with the euro franc. Neutral for me. This is around the break even on this breakout. So nothing with this pair. That's for the euro franc. Now, before we move to the other ones, which was, where is the one I wanted to discuss? Where is that? Here, euro Aussie. So the euro Aussie. Quick reminder: what are we facing here? We are in a triple cycle from the weekly, expecting two waves or any sort of a range. This or other way around, we are for sells. Daily, we enjoyed the sell very good. We reached the targets we expected, created a convergence and a bullish hidden divergence. Of course, it's always in the same time. 4-hour chart slowed down after the triple push. So our expectations were for some corrections and for sell. As for now, the market is in a straight correction, starting to build a bearish hidden divergence, basically building up reasons for continuation. This is a pretty strong resistance zone around the psychological level of 162.50, around this area. 20 MA of the Bollingers after making a straight bend to bend movement to provide a convergence. Good conditions to start looking for the sells. 1-hour chart also slowing down with this divergence. Our expectations are to the sell. The next one is the euro versus the kiwi. On Monday we were talking about triple double, and this is exactly what we got. Stopped by the divergence, game over, reached the target, right? We were expecting 38 up to 50. We got a 50, cleaned, stopped, game over. As for now, at that stage, I have no new view for this pair. As you remember, or not, you can always go back and watch. On Monday, I was expecting this scenario to happen, and if it does, we are switching for long. So I still want to see that. Second leg to develop, divergence to develop, and go long. Would I trade this sell? The answer is no, and the reason because it does not fit in the higher time frame cycles. So that's why I am neutral right now as well. As you can see, several pairs are moving to this zone exactly, neutral zone. And it's very, 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 very important for us, the traders, always to remember, we do not fight. Listen to the fact. If the market is not moving and zigzagging around, and if there is no synchronization among the time frame in a direction you want to trade, it doesn't matter how much strong our wish is strong. If the market is not moving, we cannot make the money. Always remember that. It's very, very important because we as traders always find a reason to tell ourselves, but it has to move. It's a great zone, it's a great trend line, it's a great divergence, it's a great Fibonacci, it's a great, right? Elliott waves or whatever it is. We always find a reason, but if the market is not moving, we cannot make the money. And that's important to remember that. So you don't want to force. So these are the several updates. One more, dollar CAD. Our expectations were to the upside correction. Let me just find dollar CAD here. We expected here with this false break a correction. A correction could be always in two waves or some range, right? This is our play. And as for now, both actually happened. We got the two waves and we are blocked at the top of this range, as you can see here. So even though I still believe we might see some deeper correction here, the idea switches back to the sells at that moment for one reason: the weekly triple cycle. We are still bearish for longer view. And saying that, we wish to see this pushing higher a bit, providing here the bearish hidden divergence or completing two waves in a deeper run, but switching for the next sell. And the reason for that is, once again, we got the two waves correction. Let me just delete the lines. We got the two waves correction. It was very small, but that's what the market decided to give, and it's blocked by the top of the range at that moment. So again, even though I still think we are going to climb here, it's switching back to sell the rallies. Also consider that from the fundamental view, Canadians hold the rates, Fed hints for a cut, 1 + 1 normally equals 2. After corrections, we can expect continuation. This is why switching the positions here. Right now, there is no setup for a sell, but there is also no reason to hold a buy any longer. We got what we wanted. Unfortunately, it went small and blocked. So I wouldn't fight it here. If you still wish to hold for a deeper view, which, as I mentioned before, could happen, do it with smaller risk, not a full exposure. You do not want to get full exposures in such cases. That's pretty much it. So that's for dollar CAD and the euro Canadian, which we expect to continue and move lower to the next level, the 100 of the 100 duplication of this, right? Right now is facing the psychological 147.50, the current level. Nothing against on the daily, so the idea is to continuously sell the rally. We have the setup also possible on the 4-hour chart with the SPT, sorry, and we are getting closer to the critical zone here on the 4-hour chart. As long as all will remain bearish, this is the great place to start looking for the sells. The 1-hour chart yesterday looked interesting. However, the cloud went, the trend scan went neutral, and this is just the second leg is building up. Okay, so that's what we will want to get on the pair. Okay, again, it's not there for the 1-hour chart. That's why currently 4-hour chart is the only one available. We want to get closer to the critical zone and look for our sells. Let's continue. Let's go back to the report. Okay, Aussie versus the Kiwi. So the break still holds, the daily break still holds. We're still above the invalidation. So the view still remains bullish. Currently the pair is moving a bit against. Nothing more than that to say. If you are not in the long-term trade, then the only one that I saw yesterday was these two waves, but this one failed. We got a fake breakout with the news yesterday. Now all going down again. So the short term has nothing clear since. Longer term is a bit against at that moment. But technically speaking, nothing yet changed. Aussie franc, the bullish view remains. Now it's building up a bullish hidden divergence. So basically this zone is very good zone to look for the next further buys. Again, no changes here. This is our view, just a update, right? We're still holding bullish there. Pound versus the Aussie, also expecting it to push lower. Pound Aussie, here we are. Expecting it to continue lower to complete this leg, right? So holding the sells or looking to join the sells if you are out. And let's move on. Cat franc, here we go. Cat franc. So cat franc, we are bullish since this breakout, right? Got a blockage around the round number with 4-hour chart triple cycle divergence. So we expect a correction, 2 waves or a range, and we are after further buys. Nothing changes here. Short-term retraces for bullish continuation. Australian dollar also holding its breakout yet, been correcting a bit, now retesting the broken line, not much change. The expectations are yet bullish. This is the invalidation level. Okay, again you can see clearly not many changes. Several has to go to neutral. The ones that are running are still running. And now for the new ones before we move to commodities and so on. So the pound dollar is the first one. The pound dollar, after invalidating the most recent low and failing this trendline breakout, basically right now creating a fake convergence. All that comes together with a moving average divergence on the bigger cycle. And that means that the area of 125 is yet providing an area of a good fight. The psychological zone of 125. We are still in a cycle area here. This is still developing as a potential expanded, more expanded triple, and this potentially becomes as a second false breakout. So we might see it this way or break here. Right, so what are we looking for as setup? Right now, the most recent trend line available on the 4-hour chart with a divergence is right here. So this is the trend line we would want to see it breaking. Break above that, and we are good in the buys. It will also fit in the false breakout level from the daily time frame. Watching here for the pound dollar, if it provides it to us, perfect, we have a call. Euro pound I covered before. Euro versus the dollar, there is no classical setup. However, look what we are still facing here. Triple double, one straight leg below 61.8, which now seems turning a fake breakout. We will know that by the end of the day, and might provide back the bullish expectation. Remember, break of 61.8 is a warning sign to wait for the next setup, and this might be it, a bullish hidden divergence. It's also holding a very good psychological level and supportive area, the around 112, and 4-hour chart provides a good divergence here. The disadvantage here, we don't have clear two waves here, and we don't have a clear trendline breakout. As I mentioned before, this was the trend line, but it was broken before the second leg was created. The angle is too sharp here. So in such cases, there is no obvious setup. We did not have also false breakout here with higher highs. It's not clean as per technical, more aggressive approach. But if the daily holds it, it is a bullish hidden divergence supported by the 4-hour chart divergence as well. No clear technical setup, so it's a level trading, divergence based, more aggressive, yet relevant. And if this day is over as it looks right now, we will know that in few hours, this would become the invalidation area for a bullish expectations again. By the end of the day, we will know what we're facing. Okay, that's for the euro. Now, a lot of traders ask me what's my view of the dollar franc, guys. I'm sorry, but my view remains unclear. I don't have a view here. I don't, simply because I don't see any cycles synchronization. For euro dollar, we have the cycle. This is the double cycle from the weekly, so we expect 116. We had a warning sign since last Friday, which seems to be gone by today, and the 61.8 seems making a false breakout. If it holds, this one has a cycle reason, right? Also triple higher, higher highs, higher lows. Dollar franc simply has no cycle structure from the higher time frames, therefore unclear. And this is from the Forex view. So the dollar pairs are back on action. Several pairs are moving neutral, like the euro franc, like the dollar yen, which is game over for the rally we have been working with. A dollar CAD, also game over, right? And other pairs are back in potential play out. The euro dollar, pound dollar, Aussie franc, and all the rest we just discussed about euro Aussie, okay, pound Aussie, etc., etc. This is from the Forex view. Now, commodities, as discussed on all the gold, we are expecting one more push towards 1460, 1480. Daily could making it as two waves and continuation, or it could make it simply as some range here and further continuation up. So my bullish view remains on. Silver is building up the bullish hidden divergence here. This is the trend line we want to see broken for bullish continuation. At that moment, it's still not there, did not break. This is the one we want to see broken. If this one doesn't happen and it improves the trend line, so we will improve the entry. That's pretty much it. Natural gas goes pretty cool, running with the trend line breakout unchanged. We do need to pay attention to this. Some signs started to create against us with the 4-hour chart slowed down. So risk-free would be a good thing to do. For those of you who invested from the bottom, great. Those who entered the trendline breakout, also there is enough room with 1-to-1 ratio already in play. Coffee, no changes. Everything is in a hold. And Ripple, which we were bullish since the break of the trend line, basically it was over by two waves and divergence against us. So this is where we go in protection and moving to break even. Always, as always, signs against require management. We got the breakout. Since then, the most recent low was cleaned, game over for the bullish setup. Looking for the next possible setup in the future. Nothing at that moment from the cryptos. And this is pretty much it for my list. Once again, remember, always remember, the bottom line. The bottom line is, if the market does not gain the momentum as you expect in any given trade, do not force. If you have signs against you, don't force. Don't let the market tell you the story and you ignore it. It's too easy to regret such things. Listen to it. Trade with facts. If it's not moving, step back. Reduce the exposure. Remember, if the market is not moving to provide gains, the best way to make money is to save from the risk. And it's very, very important. Unfortunately, traders don't give enough value, enough weight to that. And that's pretty sad. You know, that's the real trading, not only drawing good and expect good. When the market is moving, everything is easy. The hardest time for traders is what to do when the market is not moving as you would expect, and how to adjust, how to reduce the risk, and so on. It's very, very important, and it's very important to be sounded correctly. So any questions from your side, guys? If there is any, this is your time. Please let me know if there are any questions about anything of the list or anything I did not cover. For me, the pairs that are not covered are pairs that I don't see any cycle trading, and I remain neutral on. That's pretty much it. So my list basically is going back to the dollar pairs. Very interesting event today. Commodities, of course. Aussie yen. Aussie yen, I'm bullish. The view is bullish. The only thing which holds me a bit back yet is the unclear corrective cycle. So what do I mean? We had here the structure of 3 higher highs, 3 higher lows. Since then we have view of 2 waves down, which are still not obvious, or a range. For a range, this is too narrow and the false breakout is too big. And that's where I'm not too confident about any specific setup. View remains bullish, my personal view. As per setup, I see none. Felix, Pound Aussie I covered before. Pound Aussie remains bearish. We are riding this, and the 100 is where we are heading. I hold myself, of course, not with a full risk anymore, as we got some signs against, right, on the previous level, but after sells, holding my sells, expecting it to continue lower. Okay. All right. So, any more questions, guys? Anything else? Perfect. Seems all good. So have a wonderful day then. Enjoy your evenings or your mornings, and enjoy Wimbledon. There are several good tennis matches playing around. So have a wonderful day, guys, and I'll see you in the Telegram groups. Bye for now. Thank you very much for being here.